Ladies and gentlemen, good day and welcome to NMDC Q3 FY22 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, operator, and good afternoon, good evening to all the participants who are joining in. We're here to discuss the Q3 FY22 results conference call of NMDC. We have from the management with us Mr. Amitav Mukherjee, Director of Finance, and Mr. Somnath Nandi, Director Technical, to take us through the results and to take questions after that. So over to you, Mr. Mukherjee, for your opening remarks.
Good afternoon, everybody. So it's been a pleasure to present another set of very encouraging numbers for this quarter. For the 9 months ended 31st December, we have broken all records for the last 60 years, be it our production, our sales, especially the revenue from operations, which has grown by more than 125% as compared to last year, and all the other parameters like profit before tax and profit after tax. Even on a 3-month standalone 3-month basis, for the quarter alone, our sales have grown by 35%, as you are aware. And because of the 22.5% additional royalty, of course, the profitability could not show equivalent growth. The company is poised to make the highest ever production in its history, and we are going to build on this, and in the coming years, the production is likely to go up very substantially. On the other front, the steel plant is on the verge of commissioning. The commissioning process has been kick-started with the heating of the coke oven battery, which is the first, and it is a non-reversible process now, so it's a one-way street, and we are on the path of commissioning the steel plant. The demerger of the steel plant is also on schedule, and the proposal has been filed with the MCA after obtaining the clearance of SEBI and the stock exchanges. So all in all, we are walking the path of our targets, and we expect that this entire fiscal year would be the best ever for NMDC, and in the coming years we will be building further on the momentum that has been gained over the last 12 months. So with that, I would like to open the floor for questioning. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Systematics. Please go ahead.
Yeah, good evening, sir. Rahul here. So just wanted to check on the timelines. Now you said that your commissioning has started. So when can we see actual production coming in? And on the demerger, you said you have filed with SEBI and things like that. So when should we expect the actual listing, or when will you come to know that now we are ready for listing? And I think both these things are parallel events, right? So how should we see when do these things happen?
I'll talk about the demerger, and I'll request Mr. Nandi, who is the director in charge of the steel plant, to speak about the commissioning. So first, regarding the demerger, as you know, there is a well laid out process, and the major milestones of obtaining clearances from the stock exchange and the SEBI for the draft scheme has already been obtained, and along with the annexures, requisite annexures, it has been filed with MCA. Now we have requested for waiver of creditors meeting. So if that request is acceded, so I think somewhere around late March or early maybe end of April we will be able to complete the procedure. If of course the MCA directs us that no, we should hold the creditors meeting, and as you know, we have very less creditors, almost only two. So we have only two instruments. So if MCA were not to exempt us, then the procedure will extend by a month, month and a half, because we will have to give at least a 21-day notice for the creditors meeting, then have a creditors meeting, then get it filed all over again. So that will extend the process by about 2 months. Regarding the commissioning schedule, I would request Mr. Nandi to give you the details. Yeah, over to Mr. Nandi.
Yeah. Are you getting my voice?
Yeah, we can hear. Yeah.
We have started the coke oven heating process, and we are expecting production from coke oven maybe in the end of March or beginning of April. So after that, the production of the iron and steel, whatever finished, it may be middle of this month, middle of this next calendar year.
That will be around July, I understand.
July.
Because it's a process. After the coke oven, the next will be sinter plant, and then the blast furnace, then the SMS, and then the final mill. Finally, the mill. So
what? Yeah. So I think July you said, right? July, right? Hello.
Yes.
So you said July we should commission the steel plant. Is that right?
No, we will roll out the finished product expected in July. But if you see the blast furnace, we will be making the hot metal earlier than that.
May or June, sometime in May.
Yeah, okay.
Perhaps in May, because coke oven heating it 3 months, and then 1 month of coke making for stock.
Right. And sir, on the disinvestment, so this will happen parallelly, or once you only after you have commissioned will the government it is a government prerogative? Any idea you have on that?
Investment is being run by DIPAM, so it will not be proper for me to comment on the timelines, because that is a government prerogative. It is being run by a government ministry, and I am not privy to the exact details of transactions. So I will not be in a position to comment.
But that will run independently, along with the listing process. Right. And sir, can you give some sense on volumes? What kind of internal plans do we have for, say, FY23 and 24? I mean, you had a great year, and so picking up from a high base, where do you see growth coming on from next?
You see, we are planning at least 47 to 50 in the next financial year. This year we should end around, I think, 44, 45.
44, okay. I was thinking more like 41, 42, right? No, 44 you saying, okay.
Around, if things go well, we can end up of 40, anything between 43 to 45.
Right. And for next year, where do you see growth coming from? Mostly from Chhattisgarh, because Karnataka, I think you have already exhausted, right?
We have a 2.5 million ton upgradation in the plants in Bacheli. That is going to come up. So that will be commissioned somewhere around mid next year. It's 2.5 million ton fifth line in Bacheli screening plant, along with the upgradation of downhill conveyor. And then we have applied for EC for 10 million ton at Kumarswamy. If the approvals come in, so some growth would be seen there also. So we expect on FY23, 24, in fact, around 50 plus, 50 to 50 plus.
Right, right. And sir, lastly, sir, on your pricing, still it is looking a bit, with a lot of lag in terms of how the international prices are doing and how because we have just hardly taken a 350 rupee price increase, whereas we have seen almost a 50% price increase in the, ex-China prices. So why are we seeing so much of a disconnect between the domestic and the international price? Because I was thinking that with the cost for us also going up, we would be more proactive in raising prices.
No, you see, I have been always explaining this to in all my investors calls that international prices and domestic prices are not linked. Domestic prices have always worked at anything between 30% to 60% discount to the international prices, simply because export is not a viable option for high grade ore because it has a 30% export duty. As a result, the Indian market is fairly isolated when the international prices are on the high. So naturally, there is no direct bearing. It is one of the pricing parameters, but it is not it does not have a direct bearing on the domestic prices. Domestic prices always are in the East Coast somewhere around 40 to 50% discount of international prices. In the West, it has been on around 20 to 30% historically also, and but now things have been looking up for the last 1 month. We have been able to take a price hike, and we are keeping a very close watch on the domestic parameters. Then there are several parameters that we take into account, be it the finished steel prices, the how the pellets are behaving, and what is the domestic production, the demand supply position. So there is a multitude of variables that go into pricing. International prices is only one of them, and a marginal one at that. So we are keeping a close watch on the market regularly, and we'll take a call as and when it is feasible for us to do so. Even we are obviously keen that the revenues that is possible to generate from the market should be generated, but we cannot speculate on the pricing as of now.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Pinakin from JP Morgan. Please go ahead.
First of all, apologies, sir, if you have already answered this question. I joined the call 10 minutes late. So can you give us an update on the steel plant demerger and the scheme of arrangement? Has it been filed? Where is it? What is the status on the approval process?
I just mentioned in the previous question, somebody asked that. The approvals from SEBI and stock exchanges has been obtained, and along with the annexures, it has been filed with the Ministry of Corporate Affairs with a request to waive off the meeting for creditors. If that meeting is waived off by MCA, then we should be able to complete the process of demerger somewhere around end of March or end of April. If, however, the MCA directs that we should nonetheless hold a creditors meeting, then what will happen is that the entire process will get further delayed by anything between a month or 2, because it will take 21 days to at least convene a meeting of such creditors. Any other question on this?
Yes, sir. Just one more question, follow-up, sir. Given that you have filed the demerger scheme document, is it publicly? Can we understand what is the level of debt that has been transferred, and whether NMDC will there be with NMDC the existing company? Will there be any investments that it will own in terms of intercompany loan to the new steel company, or how will that transfer of assets takes place?
No. What happens is that, you see, this entire scheme was available in the stock markets. It was available in the public domain when we had filed it, because if somebody has objections, they could have raised that. The amount of loans that will be transferred on NMDC account is actually nil, because after the date of the after the appointed date that has been fixed as 1/4/2021, the capex of NISP is being met through two debt instruments. One is the non-convertible debentures of 543 crores that we raised, and another is a loan of around 4,400 crores that we have negotiated with SBI, and all the capex is being financed through these two loan instruments. So as the demerger takes the SBI and the that will sit on the their balance sheet as creditors and not NMDC. So NMDC's investment of around 17,000 crores will be the only thing that would appear in the demerged balance sheet, and of course that will be extinguished by issue of similar amount of equity to the existing shareholders, including the government.
Sure, sir. And lastly, just on the to close the loop on the steel plant, there were media reports that Mecon has been given the contract to start it, so the blast furnace commissioning process will start at some point of time. Where will the steel plant source the iron ore, or is NMDC entering into an agreement of selling the iron ore to the steel plant?
Oh yes, the iron ores will be sourced from Bailadila itself, our existing mines, and our future mines that will come up under the banner of NMDC CMDC Limited or NCL, which is Deposit 13 and Deposit 4. So there is plenty of iron ore is available for supply to the steel plant. So that is not a problem. We have also assured that we have given an assurance in writing that we will be willing to enter into at least a 10-year agreement, long-term agreement for supply of iron ore. Of course, like any other long-term agreement, this will be unpriced. So the prices will be on the date of dispatch, but the assurance will be for at least a decade. So we have given that undertaking both for the demerger process and the disinvestment process that NMDC will give a 10-year long-term agreement with the demerged entity.
Understood. So just to clarify, the pricing of that iron ore will be the same that you have in Chhattisgarh for your other ores that you sell to other customers?
Prices will be as of the date of dispatch.
Date of dispatch. There won't be any differential pricing for this particular contract?
No, absolutely not. We do not have any differential pricing for any of our customers, be they big, be they small.
Okay. Understood. Thank you very much, sir.
Thank you. The next question is from the line of Prashant Kumar from Dolat Capital. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, my question is regarding iron ore. Sir, at the current prices, iron ore export potential. At the current prices, even after paying 30% export duty, is it not slightly more beneficial to export some quantities? Now, I'm not talking about the preferential, the specific contract with Japan and Korea that got scrapped. I'm not talking about that. General exports to China or some other country. Is it will it be at par with domestic pricing, or will we get a slight premium, or what is your calculation suggestion?
In fines, we'll definitely not get it. But in I have not had the latest. Today the pricing was at around, I think, $148 for 62% and around $179 or something for the 65%. So at that rate, it still doesn't make a major substantial increment over the domestic prices so as to trigger any export option from our end. Apart from 30% duty, you must also realize that in export, the freight from the ex-mine to Vizag is ours. The entire 20% that is royalty and DMF and anonymity is also on our account. So when you arrive at a net back, it is not only 30, you deduct not only 30%, but then you deduct the royalty which in domestic sale is paid by the customer, or the rearing charges, which is a very substantial 1350 rupees per ton, which is paid by the customer. In exports, it is paid by us. So when you deduct all these prices and you arrive at the mine head, it is not necessarily a very lucrative proposition to export, even at around $180 or 65%.
Sure, sir. I completely appreciate the netback pricing methodology. So in case in any particular month or in a couple of quarters, when if at all there is a window that opens up, so wherein, you know what I mean, so let's say iron ore suddenly globally spikes, and at the same time there is a lag in Indian market, significant lag in Indian market for the prices to catch up. And if there is an opportunity that arises, wherein let's say we are making 1,000 rupees or 1,500 rupees more realization versus domestic after taking into account the netbacks, would we be okay to export, or that's completely off the table?
Yes, no, it's not. There's absolutely no in principle decision that we will never export, and that's a market that we will never look at. Obviously, we'll look at it, but it depends on various factors of domestic demands and other things as well. And as and when we ramp up to 70 million ton or maybe 80 million ton in 70 million ton by 2025 and 100 million ton by 2030, exports might be one of the options that we will be compulsorily will have to look at. You might not have such consumption from major steel players because all of them are adding substantial amount of captive mining to their kitty. So what will happen then is a different thing, but as of now, the immediate mathematics don't work out. But in future, of course, it's open. Even in the short term, it's an option that is always open before us, and we always take a note how profitable or not profitable it is at any given point of time.
Sure, sir. So just finally, on the same but slightly different. Sir, do we have some plans or why not think about having a substantial pellet capacity so that we can front load some of the iron ore, utilization at our mines, iron ore reserve utilization, so that pellets is kind of easily exportable, and is that an option? Would you give some thought to it? If we have to
export, it is more. It makes more economic sense to make it into a pellet and then export, because of the duty structure in pellet is completely different from the duty structure in high grade iron ore. And we are making a 2 million ton pellet plant at Nagarnar as a part of this slurry pipeline project. And as and when the phase 2 comes, which will be another 12 million pipeline from our Nagarnar to Vizag, there is an option of making a 6 million ton pellet plant at the Vizag end also. But that is an option that has been kept deliberately. We will have the option of selling only the concentrate, or then if we can choose, we can make another pellet plant there. But as of now, the 2 million ton pellet plant tender has already been awarded to L&T, I think last month only, this month only I think, and it has a completion period of 30 months, I understand, 30 or 36 months. So in around 3 years time, we will have a pellet plant of 2 million ton capacity in Nagarnar next to the steel plant, which will be NMDC property as a part of the slurry pipeline project.
Understood, sir. Thanks for the clarity, sir. Understood. Thank you. And all the best.
Thank you. The next question is from the line of Vishal Chandak from Motilal Oswal Financial Services. Please go ahead.
Yeah, thank you for the opportunity. So just wanted to understand, we are commissioning the steel plant and we are appointing Mecon as the MDO. Given the fact that Mecon have that kind of an expertise and they will be pulling in the expertise, and finally the steel plant would be sold off. So just wanted to understand what is the rush at this point in time to really commission the steel plant when we do not have the iron ore slurry pipeline or the iron ore deposit, which was earmarked for the steel plant, also in our hands. So just thought on that.
Before I answer the question and ask Mr. Nandi to join in, 2-3 clarifications. Number one, the slurry pipeline has nothing to do with the NISP plant. Okay, it's only that there will be a 2 million ton pellet plant at Nagarnar, of which 1 million ton may be consumed by the steel plant. Otherwise, it is something that we'll have to sell in the market. And even if 1 million ton is consumed by the steel plant, we'll still have 1 million ton to sell in the market. So the slurry pipeline has no generic link with the steel plant. Second, that there was never a captive mine attached to the steel plant. It was always envisaged that our Bailadila mines would cater to the steel plant, and accordingly it is still in a position to cater. Although the new mines under the NCL flag, that is deposit 4 and deposit 13, it will take a couple of years to come. Number 3, why commission it now? Please understand that unless you commission, the vendors will run away. You have a plant ready and 12% of the contract is on commissioning and testing and other things. So they are not going to wait for you for 3 years for somebody to come, or 1 year to somebody to come and then commissioning it, because they have once they have built the structures, they are in a hurry to prove that their plant works, take their money and go. And we would also not like a very, very expensive structure to be there and having nothing. So now comes the question of Mecon. Obviously, to run a steel plant, we need skilled people. Now the option from us was that obviously the question of permanent recruitment was absolutely ruled out because it is being demerged. Now the other option was to get in these experienced people from the market. NMDC could have personally done it, could have done it by itself by going to the market and hiring such people on short-term contracts of 3 to 5 years. But it was thought that Mecon would be in a better position to talk to other experts, get a team of experts and monitor the overall commissioning of the plant and operation of the plant, and then hire skilled people from the market on 3 to 5 year contracts and then run the plant as well. So it is Mecon is basically working as an agency to get the skilled manpower and the super skilled manpower with who can monitor the plant. And on this, I would like the director technical also to enlighten you on this aspect.
Yeah. Because Mecon handles, they are the actually consultant for the steel plants. They have a long history of commissioning, whether getting ready steel plant as a consultant. So they have the knowledge of people who are in this line since long. So their experience will be useful for getting the people. That's why they are engaged. Nothing like that. Mecon, of course, they don't have the experience of running a plant, definitely. But
they are not running it like an MDO.
They are not running it like MDO. They are pulling in people, and our people, whatever minimum people are there, they will also be there in tandem with Mecon.
Thank you, sir, for that elaborate answer. Yeah, that was quite elaborate, sir. So my second question was with regard to the status of the KK line. I think that has been partly commissioned, partly it's working through doubling, but one of the last part of that line is still under work in progress. So what would be the latest update on that, sir?
KK line is actually, as you know, 100 kilometers. So out of this 131 kilometers, almost 85 has already been commissioned in various patches. And another 15 will be commissioned, I think another 15-20 will be commissioned in the coming 2 months. So that leaves around 30 kilometers which the railways has promised us that it will be completing by December 22. So that is the last part between Kirandul to Gidam, that is the last part. Rest of it is already working, commissioned and working, and a substantial part will be commissioned in a couple of months and it will be working. Railway lines, as you know, even a patch doubling gives you benefit. So it is not necessarily that once the end-to-end completion has to be done to take the benefits. So whatever has been commissioned, we are already taking benefit of that. The estimates have gone up as was envisaged by around 300 to 400 crores, and that is why it required a renegotiation of our MOU with Railways, which actually now has been completed, and we have entered into a revised agreement with the Railways MOU, and accordingly the work is progressing. I understand they have awarded the tender and promised us that by December 2022 the entire 131 kilometer would be commissioned.
So just to follow up on this, if we have the entire 131 kilometers of line commissioned, so what kind of additional volume can we expect from Chhattisgarh in FY23?
Chhattisgarh, if we do around 44 this year, so Chhattisgarh would be doing around 30 million ton. Subsequently, it will go up to around around 35 to 37 million ton in phases. And then in the long term, when deposit 13 and deposit 4 also come, then Chhattisgarh itself will give around more than 60 million ton, 60 to 70 million, around 70 million ton, 65 to 70, but that will be 2030 approximately.
So I was looking at more closer as in FY23 and 24.
I think this year it will be around 30, 31, so FY23 I think it will be around 34 to 35.
Got it. Thank you, sir.
We have 2.5 million ton downhill conveyor at Bacheli coming up. Coming in, we are doing the waste mining, so that will be that. And in any case, dispatch is not a constraint even as on date. Even at 35, dispatch will not be a constraint.
Sure. Yeah. Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Rahul Jain from Systematic Shares. Please go ahead.
Yeah, hi, sir. Thanks for taking my question. Sir, on the pellet side, so you said that we are going to add 6 million in Vizag. Is that plan final, or is it still under consideration?
No, that is under consideration. The slurry pipeline phase 1 is from Bacheli to our steel plant at Nagarnar. That's a 15 million ton slurry pipeline, right? That's phase 1, for which contracts have been awarded and work is going on. And within that we have a 2 million ton pellet plant at Nagarnar, for which also contract has been awarded to L&T. So this is the phase 1. Phase 2 is from Nagarnar to Vizag, which is 313 kilometers, which is at the project evaluation stage, right? Sanctioned the work. We are just evaluating the project. One of the options there is that we are contemplating that we might sell either the concentrate itself at Vizag of 6 to 8 million ton, or the other option B is that in future we might actually have a pellet plant of 6 to 8 million ton and sell, instead of concentrates, we might as well sell pellets. Only at the contemplation stage. It's not the economic. Either option have to be and project report way.
And sir, can you spell out how much will be a capex for FY23 and what is the timeline for this slurry pipeline? I mean, for next 2 years, what is the capex?
Next year we are planning around 3,500, of which around 2,000 crores would be NISP, the steel plant. If the steel plant is demerged, then for the mining business it will be around 1,500 crores. Mostly on slurry pipeline, which will be more than 500 crores, and then we have a major project of screening plant 3 at Kirandul, which is a 12 million ton capacity expansion plan, screening plant at Kirandul. So that is around.
Right. And so you will not pursue any more steel investment, right? I mean, this is the final, like in Karnataka, you may think of setting up a steel plant or something like that.
I can't hear you.
Sir, you will not contemplate setting up any more steel plants, right?
No, with now that Nagarnar is demerged, I think the underlying fact is that we are out of the steel business for the better or the worse. It is.
And you will not take up any more such initiatives in future, right?
No, because once we have got out of one, I don't think it makes sense to get into another.
No, I'm just being clear about it. So just that this is the final, sort of investment that we have. So in future, all the cash flows will be towards dividend payment, right?
Never say never again.
Right, sir.
As of now, it is a big no. And it's a very resounding no.
Okay, thank you so much.
But then never say never again.
Thank you. The next question is from the line of Ashish Gautam, an investor. Please go ahead.
Yeah, hi. So I just wanted to know if we will get any proceeds from the NINL stake sale because NMDC had 10% stake in the company.
Oh yes, we are going to make a windfall profit out of it. Not only our loans will be repaid in full along with interest. Now that the quote has come for 12,000 plus crores, for the 10% stake, I think we should get around anything between 4 to 500 crores as an bonus.
So those proceeds will be reflected in the Q4 result, if I'm correct.
It depends on when the realization comes.
All right. Thank you so much.
Thank you. We'll move on to the next question. That is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, namaskar sir, and thank you for this opportunity. Sir, if we look at the capex done by the organization, it is on the improving the efficiency and then on the volume increase. So for this financial year, for the 9 months, what has been our spend on the improving of efficiencies on the various projects, and also on the volume increase? I'm talking about the screening lines and the crushing at site crushing plants. So what is the update on the same, sir?
You see, we have got big projects lined up. Some of them are under implementation. One small one is 2.5 million ton at Bacheli, the downhill conveyor, and the crushing plant 2.5 million ton, and an additional line is being made. We have awarded a contract of more than, I think, 1,400 crores for the third screening plant at Kirandul, which is a 12 million ton screening plant, one of the biggest in India. We have already approved, the board has already approved the project for relocation of the crushing plant of deposit 14 and deposit 11C, so that more ore is, the existing crushing plants are sitting on ore body, so that they can be released and put to production. And as you know, the Honorable Minister himself inaugurated a new screening plant 2 at Karnataka sector, Donimalai sector, for 6 to 7 million tons. So we have huge, and these all projects have already been approved and are at various stages of either tendering or execution. So in the next 3 to 4 years, all of these will be commissioned, and then that is why we say that when a previous question was asked that how much we will do at Bailadila, so naturally we should be able to do more than 50 from Bailadila itself.
So what is the current EC clearance of our various mines, both for Chhattisgarh as well as Karnataka?
51.5.
And the work which we are doing, the efficiency and the capex, what are we eyeing in terms of the expanded capacity?
The plant capacity will go up to around 60-70 million ton from Bailadila, I think. I think 60 to chala hi jayega. Not considering NCL, not considering the mines deposit 4 and deposit 13, which are under NMDC control through NMDC, CMDC Limited or NCL. Excluding those, I think we have a capacity of more than 60.
Sir, when we look at the pellet part of the story, so last time it was informed that the 1.2 million ton pellet at Dolemalai would be contributing to the bottom line going forward. So what is the update on the same? And the losses have definitely narrowed down for this quarter. So what is the update on the? Yes.
9-month period we have broken even for the first time. There was this problem of the pressure filter, which has now been solved, and the second filter is also being replaced now. So that will substantially increase the throughput of the pellet plant. And once we hit at least 50% or 60%, we will start making handsome profits. We are currently, we have increased from around 10% to 20%, and we have already broken even. And as and when the second filter is completed, that should take another 3 months at least, 3 to 4 months. So our capacity will be ramped up, and we are looking at sources to feed the pellet plant. The best way to feed the pellet plant.
Right, sir. A very small point and coming the queue, sir. Firstly, sir, as we have contemplated this demerger scheme, and as per the understanding of the listed space, once a company goes through this corporate action, buyback is not feasible and is not allowed. So by the time this entire process gets over, the issue of coming up with a buyback is totally ruled out. This understanding, technical understanding, is correct, sir? Are we of the same view?
Contemplating any buyback as of now. Sir, we have already declared a total dividend of more than 14 rupees. Yesterday we declared 5.73 or 79, and previously we had declared 9.03. So 9.01, I think. So that's right. 14 rupees 75 paisa ke aaspas we have already declared. We are not contemplating as of now.
Yeah, correct, sir. And for the cash flow part, sir, for the 9 months, can you give the breakup? How much has gone for the capex, and what is the total dividend payout in absolute numbers, sir?
Yeah, the capex is around 1600 crores, of which around 1000 crores is, I think, NISP.
Didn't get it, sir. Come again. For the steel plant, 1000 crores.
The total capex is around 1600 crores, of which the steel plant has we have spent around 1683 crores, of which steel plant is 1002 crores.
Okay. And for this remaining 3 months, what is the? Yes, ma'am. I was just answering to him. Just a follow up, and then I'll come in the queue. I will obey the rules.
Capex figure of around anything between 2500 to 3000 crores.
Okay. I'll come in the queue, sir. I have 2 more questions. Thank you.
Thank you. The next question is on the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yeah. Sir, just one question on the part of this NISP. So how much is the total land we have there, and how much has been used for the steel plant?
Yeah, the Director Technical will answer that, if that's possible.
It is roughly around 2000 acres, and as per the configuration, there is not much land is left. You are asking for the expansion part, in that sense?
Yeah, so like say, what are the opportunities available to expand the current capacity with the available land?
It will be very difficult, but it can be worked out. Mecon has already estimated it can go to 6 million ton with some rearrangement.
No, but like say, if they have to increase the capacity, whoever is the party, or even if you like say work on that plant, so can the capacity be increased with the current land available, or we have to, or the prospective party have to acquire?
That the capacity can be increased to 6 million ton in the existing land, but some amount of plants has to be rearranged.
Okay. So rearrange means what, sir?
Rearrange means if you need a second blast furnace, then you'll have to move the lime dolo plant, etc., to a new location.
Okay. And lastly, sir, on the part of this integrated commissioning, So what is the status of coke oven and all that, different modules of that commissioning?
You are asking about mode of
Steel
commissioning?
plant. No, I am talking about the coke oven plant and various other modules which are the integral to commissioning or the integrated commissioning.
Yeah, the coke oven heating process has already started. The production from coke oven is expected sometime in end March or April. And after that, final product mid of next calendar year, maybe June, July.
Okay. And so lastly, near to this steel plant, what are the available land parcels, or is it more of a tribal land? Would there be a forest clearance requirement to buy incremental land? What is the thing there? What are the available infrastructure over there at the plant?
In the land around the plant you are talking about?
Yeah, around the plant, sir.
Actually, we are having a pellet plant there around just beside the plant. That is, we are manufacturing a pellet plant there. Leaving aside, the private land is there, and of course, forest land is also there. But those are to be acquired separately.
Okay, great, sir. Great. Thanks a lot.
Thank you. The next question is from the line of Prasenjit Bhattacharya from IHS Market. Please go ahead.
Yeah, hello, Mr. Mukherjee. I just wanted to ask you a little bit about the iron ore market in India. How are you seeing the next 3 to 6 months in terms of demand? And I don't know, you don't want to talk about prices as such, but given the demand scenario, where do you see prices headed? Can you paint a picture?
Yeah, the last month it's been on the upswing, so that's good news for us. The demand has been robust. Our demand has always been fairly consistent because of our quality, especially from the Bairadila sector. And even now with the pricing at Karnataka sector, we see very regular demand being there. So demand is, as of now, not a problem. We have adequate demand, and we hope with the current steel prices, be it sponge iron or be it flat, all of them have been reasonably consistent, and there has been slight upswing. Based on that, we could take a small price hike after 6 months. So going forward, we would expect that this to continue at least in the near future. So hopefully we are bullish about the demand scenario in the near future.
Okay. So just a follow-up question on I didn't get, you said your FY23 volume, what was your target? Did you say between 47 and 51 million tons for FY23?
That's for FY23. We will do more than 47 to 50, anything between 47 to 50.
More than 47, yes. Okay. And just finally, just wanted to understand, just clarify that the steel plant commissioning you are expecting in June or July of 2023, right?
22.
22. Okay. 22. Okay.
The coke oven plant is already, the heating has started. It is an irreversible process. Once the coke oven commissioned in the end March.
Okay. So June, July 22. Oh, okay. 22. Thank you so much, sir. Yeah, that's all I have to ask. Thank you so much.
Thank you. The next question is from the line of Dinesh Agarwal from Vastu Constructions Private Limited. Please go ahead. Dinesh, your line is unmuted. Please go ahead. Dinesh Agarwal, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Sumangal Nedata from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. A couple of quick clarifications. First, on the steel plant demerger, I joined the call late, but I believe you said that by April end, we will get the demerger closed with the creditor approval required or not required. But the real value unlocking will happen when the steel plant gets listed. So from there to the listing, what are the steps and what is the time it could take?
It should take around 2 to 3 months to list a new company in the stock market, not more than that. Once the demerger is complete, and it could be April or it could be June, depending on whether we are exempted from holding the creditors meeting or not. So once that demerger is complete, the new company will take the necessary steps to get itself listed in the market. So that should take, listing of a new company takes hardly 2 to 3 months, not more than that, maybe even earlier.
Okay. And what are the steps? I mean, we have to file DRHP or something of that sort, or it's a relatively shorter route?
I'll have to look at it. I can give you an offline thing, but right now I don't have the detailed steps for listing a new company. But
Okay.
I guess that we'll have to file the red herring prospectus, etc. The normal. I don't think it should be more than 2 to 3 months for listing a new company.
Okay, no worries. I'll take it separately from you, sir. So then on when the steel plant operates, till the time the dedicated iron ore mine comes in, will we be supplying iron ore to this plant from our existing Bailadila operation?
Yeah, I have already informed you've joined late. So, number one, this construction of a dedicated mine was never there in NISP. It was always contemplated that the Nagarnar steel plant will be fed through our existing mines in Bailadila and the new mines of Deposit 4 and Deposit 13 that will come under the NCL banner. And we have also given our clearance to the ministries and to the new company that we will be willing to enter into a 10-year long-term purchase agreement, unpriced of course, to supply iron ore from our existing mines to the steel plant.
Understood. Thank you, sir, for repeating it. So next question is on the capex for 22. You said 9 months is 1600 crores. So remaining fourth quarter overall for the year, what are we looking at?
2500 to 3000 crores, depending on how fast the commissioning progresses, because a substantial amount of payments are due on commissioning activities. So once the commissioning is started, these payments will get released. So we expect to end at around 2500 to anything between 25 to 3000 crores, anything between those figures.
But so you think, I mean, what we spend in the 9 months, we can spend that in the remaining 2-3 months?
Always said that the Q4 is always 50% of the entire spend. You see, historically also last year, out of the 2000 crores, we spent around 1100 crores in the last quarter.
Understood. So next question is on this balance sheet. What is the net cash we have 31st December?
Net cash 35,000 was around 6,000 crores. Today we have around 8,700 crores.
Today as in Jan end or something?
As on Jan end. As on date it is 9,000 crores. As on Jan end it was 8,700 crores. As on today it is 9,000 crores. Of course, we have dividend to pay of 1,600 crores, advance tax to pay about 1,000 crores. Some ODs of around 2,700 crores that need to be. Around 3,700 crores is committed expenditure that we have apart from the OPEX that we'll need for the next year.
Understood. And this one last thing on this NINL divestment, you said that there are some loans also extended. So we'll get, of course, equity 10% proportion after, but is there any loans also given from NMDC to NINL?
Yes, around 80 crores of loan was given and that's interest-bearing loan. So we will be comfortably getting the entire thing back along with interest. And apart from that, after NINL meets all its outstanding liabilities, more than 5,000 crores will be left over after meeting all its liabilities, and we will get 10% of that. So that will be a windfall gain of around at least anything between 100 crores. We expect.
Understood. Got it. Thank you so much, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Thank you for all for attending this conference. We are in the middle of a great year. We expect to continue this great run not only through the last quarter of this current financial year, but also to the next financial year. We expect to have major events lined up in the next financial year, including the demerger of the steel plant, the commissioning of the steel plant, and substantial capacity expansion of our mining business. So the entire scenario looks very positive from our perspective, and given the overall demand situation of our iron ore, we expect that this great run would continue comfortably in the next financial year. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.